All right, everyone, welcome back to another RLT Pivot podcast. My name is Tracy, and I am once again joined with my amazing co-host, Mr. Dan Jensen. How are you, sir?
I'm doing fantastic. Super excited to have you back. I know we went 2 weeks without you, so it's good to see you again, hear you again, and hope you're doing well. But yeah, this is a very exciting episode. We have a lot going on in this next 30 minutes. So number one, we got to take care of some business. Number one is we had a competition that we were running for the last month and a half, something like that, for some people to submit their trading plans and just kind of build those out. Again, our goal at the Pivot Podcast is to make sure that we want to provide value. Honestly, at the end of the day, we just want to provide value in any way we possibly can. And just one of the ways that we were thinking about it is let's see if we could really take a trader from day one, or even somebody maybe more experienced struggling to kind of take some steps back, refocus, get set up and get in the right habits, build the right formation to help trade. So we've had a lot of, I was very impressed with the amount of people that came in, submitted those trading plans. So we, I don't believe you guys can see it on my end. We'd have to figure out how to stream that, but I put all of the names here on a big circle wheel. So we're ready. Whenever you're ready, we'll look to spin that wheel. You give me the cue and we'll see which one it lands on. And that person will do a 30-minute coaching session. So we'll reach out, get in contact. We'll do a 30-minute coaching session with the winner momentarily. And then at the end of this Pivot Podcast, we do have a new contest going on. So if you guys are unfamiliar with that, we'll give you guys all the details on the breakdown of the rules and how to apply into that to be entered to the next drawing. But you give me the cue when you're ready.
Absolutely. And that's going to be the theme for the rest of the year. Any challenge that we throw out is going to be a continuation to keep helping our listeners build themselves as traders. So as soon as you're ready, let's roll that wheel.
All right. If I could figure out how, I think I just got to click it. There it goes. All right. It is Jeff Johannes, if I said that name correct.
Congratulations. Yay. Jeff. All right. Johannes. So we'll be reaching out to you, and you'll be getting an email from us within the next week. So we'll get in touch and talk to you soon. So congratulations to everybody else. Your name will all be entered in for the end of the year 2-hour coaching session that will be drawn at the end of December. So perfect. All right. So now that that's out of the way, what else have we got in store for today?
Right. So obviously, as everybody knows, the market is volatile. It's always volatile in some sense, but obviously we're getting some major moves in pretty much every direction as the market kind of starts to continue its way down. And some stocks are down 90% off their highs, some 75, 80%. A lot of especially the growth stocks that might not have profit yet or showing profit for the company. So there's a lot going on. Then we're starting to see some of the bigger caps start to break a little bit as well. So very interesting time in the market. And as these conditions start to change, we want to make sure that we cover the topic as far as how to really keep up with these changing markets. What would be some of the things that you would look for to even identify in the first place that we're in a changing market? A lot of times it's tough to tell until you get that hindsight perspective.
Yeah. Absolutely. So there's actually 2 components that I want to focus on, and I'll answer your question in a second, but for the episode, I want to focus on a couple different sections. One of them is the mental switch that needs to take place when the markets are changing, when you're adapting to the market, because that can sometimes lag the actual market itself and the change in the market. So there's that component, and then there's also the actual recognition that the market is changing. So for me, the biggest telltale is particularly when I'm trading the same stocks over and over and over again, I get very familiar with them and I know their range during like a typical 3-minute or a 5-minute candle, whatever I'm trading intraday. So I have a tendency of recognizing the pattern change of that particular stock if I'm trading the same one. If it's a brand new stock, then I'm not going to know, but trading the same one over and over again, you develop a kind of a regular knowledge of it that you can pick up on those little subtle changes really quickly. And an example would be If normally, if I'm trading AMD, for example, and normally I can get 1,000 shares, and all of a sudden I'm only able to get in, a couple hundred shares, then I know the volatility has really increased. And I've mentioned this before in other episodes, but that can be a change in the tide, so to speak, if all of a sudden you're not getting the amount of shares that you used to be able to get, even though your R is the same. So that's the first one. The second one is when I'm playing the same setup, but I'm getting consistent losses. So that's a big one. Now, what I do is I also track in my back trading. When I am back trading, if I do a specific system, and I look not only for my monthly gains that I can get in during that back trading session, but I'll also look to see how many consecutive losses I would normally achieve trading that and average it out. So one of my strategies, for example, I average 5 losses in a row. That's the most that I would ever get playing that system the way that I would play it. So if I all of a sudden get a 6th loss, something's changed because it's outside of that average, and then I need to switch things up. And I've back traded how to hedge that and how to make those changes really quickly. But unless you've gone back to your trading plan and you have back traded it enough and you get those numbers, you're not really going to have those metrics to be able to help you make that transition quickly. How about you?
Yeah, so for me, and I think those are all valid points. For me, it's more or less I'm looking for key pivots in the market, whether it be individual stocks, but I'll use mainly for me. I'm looking at the SPY and the Qs pretty much every day. Anybody that is with real life trading and in the trading rooms, they'll see that I keep the SPY up all the time. I'll check on the Qs, not as frequently. I'm using the SPY more so than the Qs, just my preference. But once we start to break key levels on the SPY, so let's say to the downside, if that tide of the overall market is coming down lower, most boats are going to come with it, right? It's going to be very tough to see a stock just surging unless it's an individual catalyst, earnings come out, something that relates to the company. But my biases would be to the downside with the market. Same thing if we start breaking key levels to the upside and we're breaking key volume that was a big bearish red candle, lots of volume on it, and that starts to break out. Then for me, I'm going to change my bias a little bit in the market to the more bullish side of things. As far as the setups go, if for the most part, if just the way that the certain strategies that I take and things like that, it doesn't matter to me if the market's going higher or lower as long as it's going.
Mm-hmm.
The most difficult part of trading, to me at least, is when the market is relatively flat, right? And we're still seeing in the market today. Over the last week, something like that, the last, I think, Friday, yesterday, by the time this comes out, it's probably about a week ago, the market did break a certain key pivot where about, I think it was 8-9 days prior to it, we've had wide ranges. There's definitely money to be made on those days, but relatively speaking, the market's just been hanging out.
Mm-hmm.
The days when the market hangs out are some of the hardest days to day trade.
Mm-hmm.
And again, it's to me, it's a little bit of a hindsight because you don't really know that the market, like, it's giving you trap signals pretty much in every direction. But if you could avoid those, like if you had a spreadsheet of all your trades and you compared it to the market, and you're just seeing like, okay, the market was kind of just inside this certain channel or range. And if I did nothing, my P&L would probably be much higher than taking trades on those days.
Mm-hmm.
So just because the market's open, it doesn't mean you have to trade. Wait for the setups that you have that come in that fit your trading plan. But a lot of the strategies that I take, I'm taking more of the breakouts. I'm taking more stuff that needs momentum to kind of push it.
Mm-hmm.
And the days that we get the break higher or lower, those are the highest success rates for me. And those are the days I can let those stocks run a lot further. When you identify a channel, I'm looking for the smaller wins, just stack some wood during that time frame because it gets choppy.
Right. And that's the key thing, I think, with back trading, because even there's systems that work really well during choppy situations, and then there's other systems that'll work really well in trending. And having those tools in your toolbox is really helpful, and knowing when they work and when they don't work. So, for example, when I was mentioning that if I have, an average of 5 losses in a row on a specific strategy, then I hit the 6th, I know something's changed up. So now I need to switch my strategy and maybe go to a different strategy until I hit other metrics that have played that out. So having a plan around that, and I'm a numbers person, I love having the statistics and the numbers around it so that I know how it performs. So you like the fundamental, I guess, more, and some of the technical aspects, which some people are better at reading than others. Whatever works, but the point is that you need to identify. And one of the things that I really liked about what you said is you don't care whether the market goes up or down. And I completely agree with you. I don't care whether the market goes up or down. It's that transitional period that becomes the hardest part of change. So that being said, when the market is starting to transition, before you start to recognize some of the signals, you're going to experience potentially some consistent losses or some increased losses. What are some of the things that you do to mentally make that switch, so that you're not defeating yourself and you recognize, okay, something's shifted in the market, maybe it's not me, et cetera, et cetera? Like, what do you do to get around that?
Yeah, the mental aspect of it is huge. Absolutely. In trading, the mental aspect will make you or break you, for sure. Mm-hmm. Yeah, so good question. So in terms of what I would look for, built in my trading plan, I have max R's loss for the day, the week, the month. So for me, that would be 2 R's. If I lose 2 R's in one day, I would be out for the day, just stop trading. 5 R's in a week, 10 R's in a month. Basically, what I would be using, so it's something similar to your approach. That max loss to me helps because just because I'm in a trade, like if I lose 2 R's in one day, there's nothing to say that I'm not just wrong on the market that day or the market's just not working with my plan that day. So yes, I could jump in and might be able to get an R back or 2 R's or have a great trade. But for me, having that hard stop in place, that also helps prevent the other side where, you know what, maybe I'm just wrong or the market's just not really working with that play. If that happens multiple days in a row, if I end up losing 5 R's in 1 week, my that shouldn't be the case. I mean, if I'm mitigating risk correctly and I'm able to get more than an R on a trade or shooting for 2 R's or 1.5 R's, whatever the case is, and I'm still somehow losing 5 R's in that week, to me, that's telling me that this system is not right in the market, and most likely we're just trading flat sideways, and that's not really the market I want to be in. So I'd much rather just, even if I somehow lose 5 R's from Monday to Wednesday, and I don't trade on Thursday, Friday, I'd rather take that, let the market play out a little bit, wait till there's just more confirmation in the market, and then jump back in when I'm ready. And it's 5 R's is a decent amount to lose, but it's not the end of the world. It's easy to come back. I mean, mm-hmm. three good trades and you're back in the positive again.
Mm-hmm. Absolutely. And that's definitely one way of handling it. I have found for myself, I prefer to know what like I said, what those averages are. And as soon as I start to move outside of my averages, that's what'll stop me from trading. So I find that that's what works best for me, because it's that you know, you hit 2 losses in a row or whatever, and then you decide not to trade, and then it's the third trade that you had taken, and that would have made back all those losses, and then you have to start playing around with that psychological aspect of it. So for me, like I said, I like to have the numbers, know what the numbers are, and know that, you know, my max number of trades in a day is this. I'm allowed to take this setup twice. After I take it, if it fails twice in a day, I can't take it again, but I've back traded that to the death. So I know right. This is what it works or how it works. But I love what you said.
Having the statistics from back trading to stand on is huge. Because
it's huge.
Like we said, the mental game could make or break you in this market. And if you don't have those numbers behind you, you did not back trade enough, and it's game time, the market's on. You take those 2 losses in a row, and you start to question: is my plan valid? Oh, that's a scary question to have in this market. Is this a real trading plan, or am I just coming up with some random stuff? But if you back traded enough, you like more than 3 times, you back traded it 100 times, 1,000 times. You have good numbers behind you. You know that you're sitting at, okay, something's not right. I shouldn't have this many losses in a row, or let's wait for a better opportunity, a better day, for sure.
And I know, I know myself that I need it. I need those numbers. I need it absolutely, because if I don't have those numbers and I'm just trading, my emotional whatever goes out. It's my worst enemy. I just become so down on myself, and it's not a good sign. So that's the best way for me to overcome and not have to deal with any of the psychological aspects. Practice, 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 practice. Have all those numbers in my back pocket, and then I just have faith. At that point, I know what I'm doing.
Yeah.
So, absolutely. Are there any tips or tricks that you would recommend outside of the ones that we've already suggested to people for anyone that's starting out right now?
So what I would say is, this probably sounds weird, but playing both sides of the market is a good way to make some money in the market, right? When I say that, it's not like I'm going to go short and long on Tesla at the very same time. But what I am saying is, if I look at a longer term picture, right, nothing goes straight up or straight down. So if I'm looking at a longer term picture and I'm like, yeah, you know what, I think Tesla's about to break down some key levels. I'm going to most likely at that point take some kind of an option on Tesla, put on Tesla, give myself some time. This way I have that working in the background, right? So my overall sentiment is bearish. It doesn't necessarily mean I have to now day trade bullish on Tesla, but I could, right? But maybe I'm looking for other bullish setups, either quick intraday setups, things like that, just as the market is kind of moving one direction or another, and I'll be able to take advantage of those intraday moves. That, number one, if I'm wrong on the Tesla put, I still have stops in place, still have that. That's kind of a little bit longer term swing, but I'm able to make more intraday gains on that. So this way, and again, if I still take 2 day trades bullish, they don't work. Who cares? I still have the maybe the Tesla play in the bearish direction. Or if I'm like, okay, it looks like Tesla's at a good bounce spot. I know longer term, I'm going against the grain from what I'm originally thinking, but I can still make money on a smaller time frame. So you have to talk about the mental game. It's tough to root for something in both directions. It does take a little bit of practice to understand that and not get freaked out of like, okay, now it looks like it's bouncing on a 3 minute, so I'm going to sell my setup that I made on a daily chart. Yeah. So I'll take those plays a lot, as far as just because it's just, I'd rather, if I can make a small amount of money on a day trade and then still have the longer term picture in mind, that helps a lot as far as just mitigating the overall balance of an account, at least.
Yeah, so, and I love that. I love what you just said there, because boy, does it ever feel good when you're in a long position and then on a day trade, you also make money on the downside during that pullback. Oh, yeah. That's a great feeling. So definitely a way of learning how to hedge your accounts for sure. Now, you are talking about hedging. What are some of the things that people can do to learn how to hedge their accounts better?
Yeah, so there's multiple ways. I will use the options a lot. You don't have to. You could also short shares, things like that. But a lot of times the question comes up like, what do I do with the long-term positions? Honestly, it doesn't really matter. I mean, for me, if I was to get into a long-term position, I have a system of how I slowly add. I'll dollar cost, things like that. But after time, those positions become pretty decent sizes, right? Just from you either dollar cost averaging and going up. So in some sense, you do want to kind of protect the risk on that. And then just kind of how I mentioned, like, all right, if I'm taking some day trades, maybe I'll have some longer term swings in the overall direction of what I think the market's going to do. So I'll use options personally to kind of mitigate that. I would say the one, if you guys are listening to the Pivot Podcast right now and have not taken Hedging with Options, it's a real life trading course that we have. We'll put a link to the bottom of this video so you guys can easily access, click it. Take that course. It's not huge advanced option strategies, but it's basic. How do I use options to make money on both sides? Make money as the market pulls down. If you have a long-term position, I would say almost the last thing I want to do for me, if my plan is to get into a long-term position and I'm like, yeah, 10 years and then I'll sell it, is for me to start playing intraday with that long-term account. I really don't want to sell it. Number one, because now I have tax implications where any of the gains that I was in and made on that position, I now have to pay taxes on. And then I still want that position. So I'm just kind of hoping, like, will this thing come lower? That messes with my psyche a little bit as well. And I need that stock almost to drop down further than even where I got out, because now I got to also be like, okay, I got to get back in, but also account for those tax losses.
Mm-hmm.
But if I was able to play puts on that or hedge with puts, as this market comes down, I still have my long term, but now I'm making money on the way down. I'm able to get out of those. I'll make profit on the puts. I still have the long term. And now either I could take those puts, the profits, and buy more shares to dollar cost average with that, or be able to just kind of take a step back, look at where we are in the market, and go from there. So I would say that was probably one of the strongest, just well explained. Jeremy taught that one. I would definitely recommend for everybody to make sure you at least take a glance at that video, because with this market going a little haywire, I do personally, just my opinion, though it's not financial advice, I think the market comes down a little bit further, whether it's the next week, the next 2 weeks, the next month, or the year. I think we pull back a little bit. That information in that video will definitely help provide some kind of safety net, some kind of security and peace of mind for the long term. And again, you could also play around on different time frames with using puts, using options. Same thing if most of your portfolio is short and you're in there short shares, you might want to have some calls out there just in case you get some weird intraday bounces. We saw, what was it, 3-4 weeks ago, the market for 10 days straight just went absolutely bullish. If that happens, your calls are wildly profitable. You still have your short positions, and you could kind of still have those on the table, bring those down as well. So I would definitely recommend taking that as a good course for anybody that wants more detail into it.
Awesome. Now, you mentioned something about investing, or I guess not investing, but having long-term positions. Now, one of the things that I think is really important to identify is there's a difference between day trading, swing trading, and investing, long-term investing. So one of the things that I come across regularly with some of my students anyway, is that they will get into a quote unquote long-term position. That's the intent when they get into it. And then we come up with some of these adverse market conditions that start to throw in a little bit of volatility, and they forget the horizon of what they were actually initially getting into the trade for. And the mind game that starts to play is, oh, I should sell it. It was a mistake. And then they start kind of micromanaging those longer term positions because they're not keeping the horizon in focus and recognizing kind of the swings and the variations that can happen within that time frame. So my question to you is, when you were starting out, what was the shift for you to be able to transition from day trade to swing trade to investor mentally on a regular, consistent basis quickly?
Yeah. So the wording is easy. Obviously, you're day trading and swing trading for cash flow. You're long-term investing to build wealth. Executing that is a whole different story. So I was one of those people for sure in the beginning. I was like, I would be sitting on a position for 3-4 months. Initially, when I bought it, I was like, yeah, this is long term, and then like it didn't do anything. And then 4 years later, I look at the position again. I'm like, I would have just crushed this if I just didn't do anything, right? And when you're day trading, you're looking at the markets pretty much all day. Swing trading, you're looking at every single day. That's going to mess with your mind a little bit. The one biggest thing for me that I did to stop that is just have multiple accounts. If you do not have a long-term account right now, start one today. You'll thank me in 10 years from now, I promise. But start it today. Have a plan. So mine, it's the same. I'm putting the same amount of money every single month into it. I could buy whatever I like that's on sale. And especially if they got dividends, I love the drip. I think we've gone into some of the long-term stuff on some previous episodes of the Pivot Podcast, and we could also set one up. If you guys are interested, just shoot us a message to Tracy at Real Life Trading or Dan at Real Life Trading, and we'll cover it again if we have to, for sure. But definitely one of my favorite topics. What I would say is, by having that separate account with that separate unique plan just for that account, as to how much you put into it, why you put it into it, what your plan is, are you ever selling it? Do you play puts against it sometimes? That all has to be worked out prior, but not seeing those positions in your account every single day. And I'll still pretty much, honestly, I'll look every single day to see how the account's doing, but I know I'm not at this point selling because it's not something that I have that account intended for. But as soon as I made that shift from, I was having my long term, my swings, my day trades all in the same account, and just dividing it up, having an account with a purpose, it made life 1000% easier for me as far as being able to separate those.
Great point. Now, you did say, I think, the key, and that is the plan. And I think that the biggest issue for anything when you're dealing with volatility or unpredictability, which the markets are full of, having a plan in place, not just for day trading, not just for swing trading, but even for investing in how you're going to invest, having that plan gets your expectations and your priorities in the right place. And that makes it so much easier to handle the volatility and the adapting changes in the market. So that's the key. And I really think that you nailed it when you in your answer. So thank you for that. Appreciate it.
I would say with the hardest part about day trading is the timing, right? So the timing, you're trying to pick the right time to get into a trade. You're trying to pick the right stop, and it all kind of has to happen very quickly for you to hit targets. And like that's your goal. So again, the hardest part of that is the timing. Your entries could be great, your setups of what you're looking for could be great, but your timing might be off. When you get to swing trading, it becomes a little bit easier because your stops are a little bit wider. You have a little bit longer of a time frame, typically until that stock hits that certain stop, all of that. So with the long-term account, it's the easiest thing ever. You have really unlimited time for trades to work. You have plans in place to dollar cost average. You're building positions over time slowly. It becomes one of the easiest things you could possibly do. Most people probably don't do it because they don't think about themselves in 10 years from now, like where they're going to be at in 10 years. Typically what they'll look at is themselves today and say, man, if I did this 10 years ago, I would be in such a different position. All right, well, if that's you, then start doing that today. And then in 10 years from now, you can look back and say, I'm glad I did that, as opposed to, I wish I did that. And it's a huge difference.
Now, that being said, let's go back to the investing, for instance. It's still psychologically difficult to jump into a full position right off the bat and then have your timing so bad or timing so off that you have to endure such a huge pullback. So one of the suggestions to get around that and not deal with it unless you're prepared for it mentally and you know what to expect. If you don't, then do what Dan suggested earlier, which is the dollar cost averaging. Don't go into a full position. Go into a little bit, just tippy toe, add to the position, have that as your plan instead of just going all in right now and then having to sit through massive pullbacks because you bought at the high of that particular year. And now all of a sudden the next couple of years, we're going to have a pullback to some decent ranges. And those are opportunities that you could have been loading up with lower buys and et cetera, et cetera. And again, this isn't financial advice. So this is just for educational purposes. But the point is that if you are feeling uncomfortable with your long-term investing, it's because you either don't know what you're doing or you're over leveraged. And just like in the day trading and the swing trading, it still applies. Over leverage can happen. And you need to pay attention to that, right? So 100%. I think that just about wraps it up though. What do you want to go into the the contest?
So as we picked a winner of the previous contest, all the names that did not get chosen, don't worry, you're not out of luck. Your names do get added into a bigger pool that we have at the end of the year for a full coaching session for you. So you still have a chance, but you could also enter for this contest as well. And if you missed the first one, you still have time to enter this. This one, submissions have to be in by the end of May. So we still have a full month and a week for a full month to get those in. But that would be, we want you to, the challenge part of it is to trade, back trade for 3 months. So meaning that go back into TradingView is a good way to do it. That's my preferred method of back trading. Go into TradingView, find a stock, go back into 3 months of history, and then just find your setups that fit your current plan. Stick to what your current plan is. Look for your setups. Have an Excel spreadsheet. Write down your entries, your stops. If that trade worked, if it didn't work, reasons why, your mentality of why you want to take that trade. Those are all important into that. So go back and do that. For the contest part, to be submitted into the contest, we want you to take 2 of those trades. Either video, if you could, send a video of yourself actually taking that trade, your thought process going through it. If you don't have a camera or microphone or access to record or whatever the case, You can take a screenshot of the trade, just try to put some notes as to why you got in, why you didn't get in. So 2 of those, and then 1 actual paper trade, which means you're not using real money during the market, but you're taking a trade at the live market, because the live market will affect your mentality and emotions a little bit different than back trading will. So find one of those as a paper trade, the same setup that you look for, and see how that would do. Take a screenshot of that trade, or again, if you could record yourself, microphone, video, something like that, taking that trade, just so that we could kind of see the thought process behind that trade as well. So submit that to us, and then your trading plan, so we can see how that trade works with your trading plan as well. Those will be submitted by, you have up until the end of May to get those submissions in. And then same type of thing, we're going to add all the names to the wheel, we'll spin it, and you guys will get a 30-minute coaching with myself and Tracy about those trades and relating it back to the trading plan as well.